Hey folks, Lucas Hood here with Coldwell Banker RMR Real Estate and the Hood Group. Welcome back to this August edition of Finance Fridays. It's been a little while since we last connected. There's been some vacation time mixed in here. So I want to bring back our lovely Alex Job with RBC. Alex, how are things for you this week?
Very good. Thanks so much, Luke. I know we're into August now, but we have to go back to a little bit that's July fun that we had at that golf tournament. That was so great. Thank you so
Oh,
much for having me.
oh, that was a great day, eh? The charity golf tournament. That was July 21st up at Black Diamond for those who've been following along. I don't have the exact numbers, but we raised somewhere between five and $10,000 for the Boys and Girls Clubs of Durham and Kawartha Lakes. It was a packed event. We had some great weather. Drinks were cold, which was good. A little bit of a breeze kept everybody cool too. But it was an awesome time.
It was
They were
so much
turning
fun.
golfers away this year. It was so busy, so we had an absolute blast, and I was glad you came out. They were swinging it pretty good, even on the driving range there. I saw when you first started. It wasn't too bad for someone who said
Not
he hadn't
too
golfed in
shabby.
10 years.
10 years of putting them in the garage and I got out there and I surprised myself. I had a lot of fun while I was doing it. So I'm definitely coming back next year.
Oh, awesome. Well, we look forward to that. It's always a fun event, and very appreciative of everybody who came out and participated. So with that, let's talk about kind of what's been going on lately in the financial world here. Last couple weeks ago, a week before the golf tournament anyway, the Bank of Canada did announce an increase to the overnight lending rate of 1%. We're up to 2.5 points now in that overnight rate. So what's that done to the interest rates at RBC?
So as most people know now, we saw a huge jump there in our prime rate. We were at 3.7. It moved a full percent up to 4.7. We had a lot of calls in regards to managing clients' variable mortgages or other loans and lines of credits because it's top of mind for everyone now. Once that prime moves, it affects so many clients' products and their borrowing power, right, for a qualifying rate. And yeah, we've just seen a lot of client concern. Now we try to manage that, ourselves and also using our partners at the branch. So if any of clients have questions in regards to what they should do, feel free to reach out and we can help clients look at their specific situations.
Now, so where did you say that the prime rate was again? Because I want to just reflect or circle back to folks or on the stress test so people know where they're sort of stressing at right now when they're applying for that rate.
Right. So our prime rate is 4.7.
Okay, so that means now that the stress test would be at the threshold. There's two thresholds there. It's either 5.25% or the prime rate plus two. So now people are qualifying at 6.7
Right.
percent
Even
compared to where they would have been
now,
before.
even Luke, for clients that want to take a fixed product, they'd be looking at their contract rate. So the rate that they're getting, let's just use 5.5 as an example, 5.5 plus the two, so 7.5% you've got to qualify for. So again, that impacts clients' borrowing power. And of course, we're seeing a shift in the market in regards to prices and demand. So I think there's just a lot of uncertainty and hesitation.
Yeah, it's funny, eh? Like people are, really concerned with we'll call it volatility has been the
Yeah.
word that many clients have sort of used recently. When we look back, like March 2020, when the rates dropped, the prime rate went down to 2.45%. And, it
Same
held there
here.
for a long time, right? Through
Yeah.
till February this year. Now, that was the peak in the market, ironically, where the average price was $1,228,000, which was a 37% increase year over year compared to
That's
February of 21, which is huge,
crazy,
right?
crazy, crazy.
Kind of bonkers to see those numbers. But then you look at, we haven't seen the July numbers come out yet. It is only August 3rd today. So I'm sure we'll see those soon from Durham's Association of Realtors. But when you compare June year over year, the average price in June of 21 was 902,000. In July of 22,
Hmm.
or sorry, June of 22, it was 969,000, which is a 7% increase year over year.
Yeah.
Most investors would say 7% is a great return on your money. So it's still a good, it's still a really positive number to see the 7% year over year. I
Hmm.
mean, over the last couple of months, even from May to June, there was a 2.5 or almost 3% drop in the average sale price. We might see a bit of a steeper drop, from June to July with that rate increase
Yeah.
that came on the 13th. We'll see how that shakes itself out. We're probably going to be looking at closer to 3 months of inventory or 2 months of inventory and almost 3 weeks as the average time on market for properties to sell. So,
And this is
there's
what
definitely a shift there.
I was just going to say, this is what we call more of a balanced market because of the days on market.
Well, as they not necessarily the days on market, but traditionally speaking, they kind of say like 3 months of inventory is
The
when you start to
inventory.
shift towards a balanced market, heading towards a buyer's market. When you get more inventory like that, that's kind of one of those metrics. And when you're under that, it's typically is a seller's market. But with where things have been the last couple of years, there's more homes available on the market right now. Last week checked, there was about 1,300 available listings in Durham region, which looking back at that February of 21 compared to February of 22, they were around 2 weeks in inventory during that entire period of time, those 12 months. Now we're almost at 2 months in inventory. So buyers have more choice. And
Yeah.
with the fact that everyone's sellers' expectations are still, being sort of combated there by what buyers are able to pay, not necessarily
Yes.
willing, but what they're
Yeah.
able to afford now,
Yeah, that's right.
is going to really start to, it's kind of what slowed down the market too. And again,
Mhm.
annually, seasonally, summertime's usually a quiet period. June, July, August are quiet. We should see things start to heat up again before school starts, because typically that's when everyone's trying to get their kids into school and get all that kind of stuff organized. So if they are going to move, or if they have moved and now they need to sell that house, there's going to be some potential for a deal to be had for buyers out there when the sellers are in a bit of a position where they need to get that house sold. So keep an eye on that as August comes to a close, but we're still a few weeks from that happening. But this sort of hesitancy that some buyers and sellers are having right now leads us to the conversation around, do we do it now or do we wait?
Right.
Some of the forecasts that we've seen, with the interest rates, typically the or the bond market is a strong indicator, a correlation between what the interest rates are going to be doing on the lending side of things, and those appear to have peaked in July. They're starting to come back down about a half percentage point as I've sort of been watching over the last couple of weeks. So we'll have to look forward to September and see what that announcement looks like from the Bank of Canada, and if they're going to announce another increase or if they're going to just hold the rates where they are.
Yeah.
Right. But it could be, talking about those people forecasting again, those market experts looking at the differences in rates, past and present, and forecasting what could happen. By the time rates stop rising and they'll sit for a period, just like in March 2020 when they dropped the rates and they held them for 2 years, it could be a period similar to that where they sit for a while. The market will adjust and slowly start to come back up because historically speaking, that's real estate always increases, right? But in value. But so there should be a period where it's sort of the interest rates flatline, and by the time they start to come back up again in terms of values, to that peak point in February of this past year, it might be 2028 by the time we see those numbers again. Of course, we're going to see that change coming, because we'll see, interest rates will drop and then prices will start to take off again.
Yeah.
But maybe not at that 37% year-over-year
Let's
rate
hope
we
not.
saw last year, right?
Healthy. It's not healthy.
So,
And
but getting back to this sort of thought process of, do we
Okay.
move now or do we move later?
Right.
Well, if you're concerned about having a higher mortgage payment and buying a new house and moving when you're in this market under these certain conditions, brings up the opportunity or the question, maybe we invest in our house now, to improve its value.
Yep.
The next time when we do want to sell, because maybe there's some things we want about the house, but we're not sure we want to take on that additional mortgage. So that was it's one of the things I wanted to sort of pick your brain on today, Alex, around, if someone was going to do take out that home line of credit,
Yes.
how much could they get? What would that payment look like that they could use on improvements to their home, whether it's a kitchen, bathrooms, finish your basement, landscaping in the yard, whatever, that's going to enhance its value for when you do want to sell. It's sort of that, what does that look like compared to maybe taking on an additional $500,000 in mortgage, selling the house that you're going to take those proceeds and apply it to a new property. sort of what are the differences in payment there, and allow people to, start thinking a little bit differently about buying versus selling, or just investing in their current home.
So let's go over some of those carrying costs, because so many people they're not used to these interest rates, right? You go back, the rates have been around 2-3% for a really long time. So that's what everyone has in their mind. I mean, it takes a quick mortgage calculator online to figure it out, but I have prepared some numbers for you just to look at that and consider those options. So we used, in the scenario, we used $50,000 of borrowing, additional borrowing. And of course you have, different ways that you can do that, whether it's fixed or variable. And then we have our secured line of credit. Our secured line of credit is at prime plus 0.5. So that would currently carry for 5.2%. And on the line of credit, it's just an interest only payment. So on 50,000, that came out to be, let me find it here, it was about $213 a month. So a nice, comfortable amount to carry, but keep in mind that is interest only. So there's no principal payment to that. That works for some people, and others, it sits for too long. And again, that's a variable. So it could go up, and your cost of borrowing could increase at any point in time. But with it being the line of credit, it's completely open to pay off. So if you've got a variable income where, let's say you're a contractor and you make good money on a job, and then you want to whack that balance down from 50 to 40, apply a lump sum, you can do that without any additional charges. So there's a lot of open flexibility on that. Now, if you were to carry it in the form of a mortgage segment, we do the principal and interest payment, and we can stretch you out to a 30-year amortization. That's the longest you can go. When I looked at a 5-year fixed rate and the 30-year am, it was just under $300 a month to carry the $50,000. So again, it's like, what are we doing with that money? Where are you applying it? And does it add value? Does it add convenience to your life? Is it that finished basement that you needed, rather than getting into a move where you've got your real estate fees, your legal, your land transfer tax, those expenses that take some of that equity away? It's an expensive transaction to move, but sometimes it's worth it, and sometimes you can weigh it off by going, hey, maybe we should stay where we are and invest in our current property. And like you said, it can add value to their house at a later time, when maybe it really is necessary to move, changing areas or getting into a bigger house. In comparison, the 50,000, I wanted that was the one that was the just under 300. It was 286 a month. That was if we stretched it out over a 30-year amortization. You certainly have those clients that are like, not a chance. I'm not borrowing that much money for 30 years. 30 years is a really long time. So if you want someone that's a little bit more ambitious, let's give it a 10-year window. On today's rates, the carrying cost would be about $544.
And that's at a 10-year amortization.
That was 10 years, yeah. And then of course, like at the end of your 5-year term, it comes up for renewal. It's completely open. You can pay it off. And then we have those prepayment options that you could utilize too, if you want to get even more aggressive to pay it off faster. But again, everyone's plan is unique to their financial, their own financial
circumstances
and circumstances.
So you're kind of adding that, $218 or $300 roughly payment to not to your existing mortgage. It's a second debit that comes out of your account. But, so if you've got a $2,000 mortgage payment right now, based on the rates from a couple of years ago, which were great, and then you get this little additional segment that helps you improve your property now, you can pay that down over time, pay that off from the proceeds of the sale when the time does come to sell, and you've added value to the home, and you're kind of not timing the market, but when the market comes back and it is time to sell, you've invested in the property and are then bound to do better than you were had you sold without doing that investment. So
that's right.
There certainly are ways to improve your standard of living, if you want to call it that, or your lifestyle by enhancing the home. And again, you get to enjoy all these improvements after you've made them, right? It's not like you're just gonna do the work and then sell, right? You can do it now, you can enjoy it for a while, and if it is 2028 by the time that these wonderful prices come back that we did see from earlier this year, if it is a little while, then you still get to enjoy those improvements in the meantime. So it's definitely something that folks should consider if they're torn between should I move and get these amenities in the home that I want. but they're concerned about what the rates are doing, and
Mhm.
allows them to, accomplish almost the same thing, but not taking on so much
So
debt, as
much.
it were.
I know you wanted to look at if you're moving as well, and like let's just say a $500,000 mortgage, because it very easily could be like that more expensive home that has some of those things. If someone's taking out a $500,000 mortgage on top of well, let's just say a brand new mortgage or on top of their current debt, that carries for closer to 2,850, $2,850. So
Mhm.
that's a hefty, that's a big payment.
It's a big difference,
It's
right?
a huge difference.
Um, and some folks that have been on talking about it, fixed versus variable again, hearing some concerns about, oh, I'm in a variable and I'm not sure, do I lock in at a fixed rate now
Yeah,
because their rates are going up? I mean, you could still stick on that variable payment, but just adjust the payment to, I
yeah,
think, address more principal, right?
yeah, of
Increase your
course.
payment for a period to address
Yep.
that, because
Got a
it's your
lot of clients
interest that
do that.
it's the interest component of the payment that's increased on the
Right.
variable part, right? You're not paying down your principal any faster. So that's there are options out there too. Should you have the means to do that.
Hmm.
Yeah. Well, Alex, is there anything else that we should touch on here today? We've had a bit of a good chat so far, but our first one getting back into the swing of things here in August. What do you think?
I just think that next call, we need to circle back to the numbers in July because it'd be interesting to see, year over year, where are things and what's going on. So let's do that next on our next call.
That sounds good to me. Well, folks, thank you so much for tuning in today. Feel free to leave a comment or reach out if you have any questions. You'll notice our contact information at the end of this video as well. So feel free to follow us and subscribe on YouTube too. But until next time, have yourselves a great day, and we'll be with you again soon. Bye for now.
Bye.